Welcome to Vault Stars, where we talk everything markets and those who make them. Today's episode is brought to you by Meta, creating innovative generative AI solutions that can accomplish any task except tax evasion. And by Google, you'll pay whatever it takes to get exposure for your business, won't you? Oink for us like the pig you are. And by the United States economy, our gross domestic product grows almost as fast as the market cap of NVIDIA. Don't forget the rest of the U.S. the next time you're looking to invest. And finally, by GammaStrike.com, providing actionable real-time data for every type of trader. You've tried the rest, now try the best. GammaStrike.com. I'm Jay Fresh, and I'm joined by my co-hosts, Gherkin and Dork. Let's get into the market overview. All right, what's going on? Powell today, just a few hours ago.
Yeah, not that long ago.
Stagflation, is that what he was...
Basically, yeah.
He said he said something much more classy. Okay, he said we are facing risks in employment and in inflation. Okay, risks to both sides of the dual mandate. That's not the same thing. It's classy.
Yeah, yeah. What do they call it again when inflation goes up and employment goes down and then GDP falls?
They call that risks to the dual mandate.
They call that a soft landing.
Oh. Okay. There's nothing. There's nothing better than landing in a hole.
Right.
So. That's what she said.
We can cut that, right?
Nope.
Yeah, he pretty much just said, we don't know if there's going to be a cut. So far, we have a lot of disagreements for December. So,
well, we had two dissenters today.
For this one, but for the next one, they have a bunch of crazy shit going on.
Well, people put a lot of weight into the dissenters because you have, over time, the correlation with dissents has been that the following meeting will veer the way of the dissenter. And this time they kind of went in both directions.
Yeah, the eyes
Moran came out and he was like, or Miran, whatever his name is, who gives a shit. He came out and he was like, I wanted a half a point rate cut today because he's mentally retarded. And then
half point.
He thinks, just to be clear, he thinks the neutral rate is somehow zero.
Yeah, he thinks we've deported. Trump's done such a great job deporting so many people that the neutral rate is in fact just negative.
And if you only have to go so far back into his Twitter account because he was a FinTwitter. Who the FinTwit community has seems to roundly denounced him as a shill. But you only have to go as far back as October to see him criticizing the Fed for lowering rates too soon and that rates should be higher. I wonder what changed between October and now.
Sometimes someone's just always looking for a boot to lick, and then they find just the perfect one.
You know whose boot got licked today?
Yeah,
TLT.
Yeah, it did.
Long End has.
Long End it wasn't the boot that was licked.
Stuff. No, yeah.
Most of the. Well, hold on. The other dissenter, whose name I can't remember at all, said we shouldn't have cut rates. Period. We shouldn't have had a rate cut today at all. And I actually thought more of the Fed governors were going to lean towards no cut because. On the last cut, they were like, "Oh man, I think we might have gone. Into easing territory here long before we wanted to." But the real bad news that came out of the Fed today wasn't really about the rate cut. I mean, as the three of us at least are aware, the Fed's fucking rate policy doesn't actually do anything. What really mattered today was QT. A lot of the credit market has been betting heavily that we were just going to go QT straight over to QE. And J-Pow's announcement today made them a little sad. Basically, he's just going to flatten QT. We're going to continue to, roll off. They're not picking up any MBS. SOMA's not increasing. Fed's going to become a buyer of whatever that net over 35 billion and net over 5 billion. So whatever coupons they receive from the Treasury over $5 billion a quarter will go towards buying more bills, and instead of rolling off the balance sheet, they will simply be buying bills with whatever they have left over from MBS in excess of $35 billion a quarter or a month. Sorry. And so this isn't QE. I've seen a lot of places people are like, oh, QE, not QE at all. This is just the stopping of QT with no move to QE whatsoever. Um, this is basically juggling of durations. Um, and with the Fed buying at the front end, I mean, they provide the Treasury with a little bit more liquidity, but investors in bonds are going to get pushed out to the back end a little, where, you know, if you have a negative outlook on the economy, you'd expect yields to rise. Anyway, that's exactly what they did today, to Dork's point. Especially in the belly of the curve, the 2, the 5-year. Those middle range durations really rocketed it up hard, and then we got a lot of movement at the top end, the 10, 20, and 30 as well. Dollar went up pretty substantially on the rate cut, and almost, just doing the exact opposite of what the rate cut was intended to do.
Yeah, I mean, I think this
can I just
lends credence
say-
to Jay Fresh's points on debt issuance.
Yeah. Can I just say I feel very vindicated today in terms of I've been saying ever since, before even the first cut, that the more they cut the front end, the higher the long end's going to go. And every single cut has been accompanied by a push up in the long end. And I think that is basically due to the fact that their high rates are stimulative. They're pumping in, via the mechanism of interest payments from the federal government. The debt is so high that their high interest rates are basically pumping in zero risk or zero duration returns, which I've been happily taking advantage of, up until this point. And every time they cut, it's not in my best interest. I get a little sad because I have, I put a lot of weight into the front end, but because it's so stimulative and it's such a good deal, there's no risk and you get this free return.
Well, there's another aspect of this to probably consider as well. Like, there's so many participants that are short the front end in order to generate yields, and they're collateralizing those. And so every Fed cut on like the 3-month and lower durations is essentially a haircut on all that margin and leverage, which is substantial, right? Because everyone's just collateralizing the shit out of that
because it's risk free. Yeah. Yeah. And so, I kind of think of the way I've been thinking about it a lot recently, and I really like this model. One, because it's provocative. I have no idea if it's correct, but it is an interesting way to think about how the Federal Reserve functions. Is that I think we all can agree that, there is a market rate for the front end, right? If the Fed stopped intervening, the market would find a rate at the front end. And that rate is probably the natural rate that sort of balances all of the other things going on everywhere else. And so when the Fed deviates that front end rate from whatever that natural rate might be, the Fed believes that a deviation above that rate is, it tightens credit, and a deviation below that rate loosens credit. But I think that a deviation from that rate in either direction loosens credit and creates a boost to the market. Because and this is largely a function of this era of very high fiscal debts, right? Because the primary mechanism by which a high rate would boost the economy is through interest payments from the government, right? So this really only applies to really high fiscal debts, but it's also why it doesn't apply to things in the past where we had debts that were lower. And so, yeah, so I think as the Fed comes down and gets closer to the real neutral rate, they're actually tightening. And so they're tightening into their fear of a slowdown. And so I think that as they continue to tighten, they might actually exacerbate the very thing that they're trying to prevent because their model's wrong, right? And so to me, actually pausing and not cutting is the bullish outcome because it continues to pump free money into the economy that otherwise wouldn't be there. I don't know. Again,
Well, no,
harebrained, but it is provocative.
no,
Anybody listening probably feels very strongly about it.
I don't disagree with the fundamental principles there. I mean, I think the Fed model's been pretty incorrect for some time, so makes sense.
I mean, didn't Jay Powell today say in the conference call that he didn't think that the investments in AI, which is a large part of the expansion of credit and debt today, was actually very rate sensitive? I'm pretty sure he did.
I don't know. I think that was too close to the part where he said the stock market is the economy, and so I just kind of lost it, and everything else turned into a blur. That was something.
Yeah. All right. Do you guys have any other things you'd like to say about the Fed? Because we finally get some drama. We've had a couple dry spells, so get your last words out because we're moving on from the Fed. If you have
I'm
nothing
good.
else to say,
I mean, no, I think it turned out kind of as expected. The bearishness was probably just mostly speculators being a little sad that they weren't fully committed to it. Just another rate cut, back-to-back cuts, so as they had expected because the market loves optimism. So had to be a little sad
short
about that.
vol recovered nicely though with that 0% close to close.
Yeah, that was nice.
0.00. It was actually beautiful.
Moved back into tech earnings, but some of those earnings not so hot, right?
Well, we'll get to earnings in a minute. Before we get to earnings, we have to talk about inflation.
Yeah.
What do we all bet for this? I know we had a stupid bet last time. Girk bet down, I bet flat, Dork bet up. So does Dork win?
No, I bet up.
No, market up, not inflation up.
Oh, this was market down. Girk bet inflation up, market down.
Yeah.
I bet flat, and you bet down up.
I think it was down up or something. Yeah.
So did we all lose?
I think so. I think even Ron's bet.
Well, Ron bet that they would release it on Monday.
Yeah. Get fucked, Ron.
All right, so we all lost. So inflation was up, and the market was kind of flattish to up. It was kind of up. It went up.
It went up.
We'll say it went up on
we'll just call it up.
Core was down. Actually, so core inflation was down over the prior month. I think went from 0.3 to 0.2, but headline moved up because oil prices were higher. The refined petroleum products were higher. So we got a bump in headline, a drop in core. I mean, overall up though.
Yeah.
I know nobody likes to look at 0.2% month over month as being up, but it is in fact a higher inflation print.
Well, so every time CPI comes out, I always like to look into the details of what went up and dig a little deeper. I think it was interesting that gas was up because I think, as I've said before, that the lower gasoline prices have sort of had this sort of basket-wide effect of lowering everything down. And to Biden's credit, one of the greatest trades of all time was selling all of our strategic petroleum reserves to make that happen, which have still not been refilled, which we probably need to do at some point. Hopefully they're doing it now. But let's go through some expenditures. Always gotta go to pork because I know Dork loves his pork chops. And pork chops is, if you've never looked at the CPI detailed expenditure report, pork chops is a line item. Pork chops.
Nice.
What do you think it was? Month over month, Dork. Pork chops.
I'm going to say 40 bips.
You would be wrong. 150 bips.
Oh my God. I'm going to have to switch to something else like soy.
Fucked. Yeah, you're going to have to eat chickens or something. I think chickens are down. Yeah, chickens, fresh whole chickens down. Chicken parts are down.
Spices and seasonings are up.
Chicken's the meat of the season. So get your chicken. Eggs are down, but they were way up before. Food kind of mixed. I mean, overall it's pretty high. I think a lot of meats and stuff were up. A lot of processed goods were up a little bit too much.
Dishes and flatware are up.
Are you in the market?
No. But I know
Getting that
people
on
always
your
are.
wedding registry.
Tools are flat. That's kind of nice.
Yeah. So what was interesting to me though from energy, so gasoline was up, but electricity and natural gas were down like bigly.
Apparently smartphones are down bigly.
That's not true because Apple rallied like $20 on strong iPhone sales.
Well, they must have been selling them for less.
But let's get to the services. I mean, the goods are one thing, but there were a couple things in services that I thought were notable to talk about. So the first one, shelter. Shelter was weak, and that is something that we've been told is 6 months away from getting back in line for the last 2 years. So it's finally starting to make the delayed housing costs folks come to fruition. But a lot of that too, I mean, there's a lot of spread in that. There's a lot of the reason that that's down is because yes, some markets are still strong like the Northeast, but then some markets are just getting absolutely hammered, and so like the average is sort of in the middle. So I think there is a lot of concern for the regional effects of housing, and that'll kind of dovetail a little bit into our discussion in a moment about earnings because D.R. Horton had earnings this week. But before we get there, let's do a couple more of these. So it was notable that shelter was down, and shelter's like what is it, 35% of the index, something like that. So. Let's see. But the one thing I wanted to point out, where did it go?
Daycare and
So
preschool?
medical care services were kind of all right, but so one thing that really popped, hospital and related services, and I want to talk about this when we get to earnings too, because there's a notable earning here. So hospital and related services was up 0.8 month over month. Another thing that was way up month over month was care of invalids and elderly at home. So you think about who has all the capital and who has all the cash. It's old people who
Elon Musk
are hanging on to their passive investments that is now their retirement money that they're foregoing selling to use as cash. But as the economy struggles and it becomes more of a have versus have nots, and the haves are all old, I thought it was quite interesting to see that care of invalids and elderly at home is up how much month over month? Give me a guess.
Oh,
I can't give you a guess because I already looked.
3%.
7%.
Jesus.
For the year, 11.6%.
Oh man, they're already digging into those boomer cash piles, huh?
Well, it's always been the plan, right? Like
Yeah.
because you don't want this wealth to be passed on to their children. So what you do is you suck them completely dry by keeping them legally alive as long as feasibly possible.
I think it's a little less sinister than that. I think it's just simply they demand a lot of care, and there's not a lot of people to supply that care.
I'm
Who are
trying to
trained
really
supply
excite
it.
and provoke our audience here, okay?
Well, I don't know. I like to think my dad listens, but I know he doesn't because I will never tell him that this exists.
Okay, wait. We got to find funeral services in here.
Oh God, that's a little dark. Maybe we'll do that next week. But another
Point
thing I want
four.
to point out, because we're going to talk about this on the earnings segment, is health insurance up 0.3% month over month and 4.2% year over year. Otherwise, other things. I don't know that I pulled out a ton of things. Things are kind of a little bit all over the map. I think that's going to be the story going forward. Is there's just going to be a lot of uncertainty and and when I say uncertainty, I don't mean uncertainty in what's going to print, but I mean uncertainty in the data that does print. Right, so you're getting something that I always criticize the BLS and the BEA for is when they publish these numbers, they don't often publish uncertainties. Sometimes they do. I think for the CPI, it's somewhere. Not this one, but there's some of them they'll post what the uncertainty is, and I think that they don't post it because they're afraid to post it. Um, and I think as you see a larger spread in different items over time, you just become more and more uncertain. But anyway, okay, so I am rambling about the CPI. I think we've talked about everything. It's up, but it's mixed. I think that'll continue to be the case for some time. But let's move into earnings. And before we talk about earnings, let's just talk generally about the layoffs. A lot of people are laying people off. Amazon 14, was it 14K or was it 30K? UPS,
I think it was 30K.
I think it was Amazon
It's
30,
between
UPS
that.
14, and it was a total of 40. I don't remember.
No, there's been rumblings that it could be up to 30,000.
Okay.
Rumblings
Is
and
UPS
grumblings.
48K? Is that an accurate number?
Yeah.
Wow. GM a few, Paramount a few, Nestle 16K, Novo Nordisk 9K. A lot of people are laying people off. What's going on with there? What's that about?
Overhiring from the pandemic for, tech stuff like Amazon, I'm guessing. They're going to say it's AI probably because, it's a decent enough scapegoat for it. But I mean, I think that it's pretty clear that, especially in 2020 and 2021, like, I mean, anybody with a CS degree could walk into any company and get an internship. Now it is the exact opposite. So I think that, it kind of is pretty clear for that. UPS, I don't know about that one. GM, I don't know about that one. Paramount, interesting, but that's kind of tech adjacent. I don't know.
Well, I mean,
Yeah.
you could also, I'm sure that Paramount, there's probably an AI stint to that too, of like how much artwork is being generated artificially versus using artists.
Right.
Personally, I think it's probably some. I mean, in that area, I mean, it's been clear, people have seen that. It's almost kind of like a game where you go to one of your streaming services and you spot the AI generated image. You're like, oh, that person has 6 toes. I found an AI image on like a Netflix, an image to promote a show, right? I know that like the Formula F1 reality show on Netflix has been popular for a while, notably had some of those. So I think probably some of that's going on. I think also too is just you know, nobody's taking any risks and everybody's just bored with all this shit and they're running out of money and they're not willing to shell out more for ho-hum stuff.
I mean,
I have a lot. Oh, go ahead.
Oh, sorry. I was going to say, I think that something notable about all these layoffs, right, is that I kind of expected as CapEx. I think we talked about this a few weeks ago. As CapEx increased, we were going to see more layoffs, right? Because cash flows are going to start to hurt. I know Microsoft just posted 35 billion for the quarter, and they walked back their prior moderate guidance and said that they're just going full bore into AI infra build out. Alphabet raised CapEx again alongside their earnings. Meta lifted the lower end of their CapEx up for 2025 to 70 to 72 billion. And Amazon announced, they actually announced up to 30,000 layoffs, but 14,000 of them, I believe, or 14,000 of them at the corporate level, which is almost 10% of their corporate workforce, all of them using the ideology that AI is able to replace some of these jobs. And while I agree with Doric, a lot of this was simply just overhiring during the COVID era, when labor demand was extremely high and participation in the job market was at all-time lows. These companies were snapping up everyone they could get a hold of, and now they don't need them. But I think for now, saying that AI is replacing these jobs is probably very good advertising and a justification for their continued capex increases. However, as they continue to increase capex more and more, they're going to have to lay off more and more people. It's going to be harder and harder to justify AI replacing those jobs. And personally, I doubt that AI is replacing any of those jobs because it's incapable of replacing a human being in any way whatsoever.
No, there's some ways it can replace a human being, and it's primarily middle management folks that are making PowerPoints and
Really? Because they
going
can't
to
even
Zoom
make a
meetings.
PowerPoint.
Yeah, I
But no
will
one's going to see the
agree.
PowerPoint, and they're going to auto reply to the email
Well,
saying,
that
"Thanks for the
okay. So,
PowerPoint."
but this is something that I've been talking about for years now, and I mean, every day it's more and more coming to fruition. And I stole a little bit of this idea from the late great David Graeber, who is an anthropologist in the UK who wrote some great books. And one of the things that he wrote about was his thesis on bullshit jobs. It was one of the last things he wrote about before he died. Actually, he wrote a book on it. Great book, highly recommend it. I'm not affiliated in any way. I won't see a dime, but I'll shill David Graeber all day long. But in that was that the only person who could define what job was bullshit was the person performing the job. And so he went around, obviously, the statistical rigor is probably uncertain, but he estimated based on his own research, something on the order of like 40% of all jobs are bullshit, which means that they don't have to be done. If they stopped being done, nothing would change. And one of the examples that he gave was the Affordable Care Act. And when Obama was being interviewed for why he designed it the way he designed it and why he was pushing the form of it that he was pushing, why not go to single payer? Why not instead just go to why are you not proposing single payer? Why instead are you proposing this marketplace? He said, well, what are all the people that work at these companies going to do if we get rid of them? And I think that was kind of central to the thesis of like, yeah, it's kind of ingrained in our very DNA that we create fiefdoms that are not necessarily, hardcore capitalism. We create these fiefdoms where we hire people to do things that don't need to be done. And it's gotten out of control. And it's gotten to the point that instead of us this is me now, instead of us recognizing that we've created, just hordes of jobs that are unnecessary, we create this idea of, oh, well, we can get an AI to do all of this unnecessary work. And then if you think about it from the mind of the people who are in charge, who are also doing most of this unnecessary work, to them, the AI is magical. It is this wondrous technology that does all of their work for them. And what they're not realizing, because it would be too painful to do so, is that the reason that they're enamored with it in the first place is because the work they do has no value and they should just not have a job. So all of that to say, AI might be replacing workers, but it's not replacing workers to increase productivity. It's replacing workers to preserve margins in the face of pressure, downward pressure on them, right? And so, yeah, I kind of agree. I mean, I agree with both of you in a sense, but I definitely lean more towards Skirk in saying that, yeah, I think that the AI story makes it sound a little bit less harsh, but the reality is times are getting tougher. The money's running out. The more the Fed cuts, the less slush money there is running around. And so everybody's got to try to preserve their margins, and they just cut people who aren't doing meaningful work. And yeah.
I want to say I just looked. Challenger job cuts year to date through the last announcement in September, 950,000, which is significantly more than what people are paying attention to here around earnings. That's quite a lot.
That number is large.
Yeah.
Yeah.
That's a lot of
That's
job
what,
cuts this year.
2% of the workforce, roughly? No, it's like
Hey,
like
it's called
term,
risks to both sides of the dual mandate, and it's
0.7% of the workforce, something like that, 0.5, 0.7.
See, the
That's a
way I
lot,
see
yeah.
it right now is like right now they're cutting to free up the ability to like they free up operating expenses, and they can redirect cash flows towards, you know, data centers and GPUs and buying land and supplying power and networking and whatever else they have to do to support like that like hyperscaler pipeline. But the costs of that are going up really rapidly, right? Because all the demand is focused in one sector. And so, you know, if you're not building a data center now, the cost to build a data center is rapidly rising. And tariffs obviously aren't helping that. So that's going to be pushing up producer side inflation, not at the finished product level, you know, but the core commodities are going to be a big problem for all of this, because, you know, not only the rare earths, which is obviously an issue, with, I think Trump and Xi start meeting today, but just across the whole spectrum. I mean, from making the actual building, the plumbing, everything, the costs are just going to keep rising on the base materials, which means the finished product costs are going to just magnify that effect tenfold. And I think where we start to see risk in this is if we see a progression from like these job cuts, and like they're calling them trimming in a lot of cases, to if we start seeing broader layoffs in services, or if we start to see CapEx plans getting paused. Because right now it's CapEx up, headcounts down, which is pushing down on wage inflation. But if that CapEx stops, we start seeing headcounts flatten out. We could see another big spike in the wage inflations that can drive a pretty rapid recession and high unemployment, like a very rapid move in unemployment. So
Yeah, so I'm going to try not to put you on the spot here because I know that Microsoft and Google just came out with their earnings today. But if you have looked at them, great. But
a little bit. I looked at it a little bit.
I wanted to pull up this picture I made earlier this week just because I was interested. So I took the S&P 500 cash flows and I kind of tried to break it out in a way that made sense to me. So you have, in the white, you have the headline number that everybody looks at, the net income, and that's going up and everybody's, cheering and you know, doing somersaults and wonders, you know, just loving, right? But if you break out the cash flows in terms of, you know, operations, investing, and financing, so you have the operations flow in yellow, and that's obviously higher because that is essentially the net money they get from the money they receive for their services and goods they sell versus the cost to sell them, right? So that's kind of like the the one of the true, you know, very salient, very timely measures of how well it's doing, and that's basically been flat since, you know, 2022, completely flat at around $2.5 trillion. The interesting ones are the investing flow and the financing flow. So financing is buying and selling debt or buying and selling stock. So obviously in 2020 during the pandemic, they were all into 2021 a little bit. Everybody was selling stock, you know, to try to shore up balance sheets and things like that. But then through, you know, starting in around late 2021 into 2022 and all the way through 23 and 24, they were dramatically buying back. And I know Girk's been talking about for a while now, you know, that the flows of all of that buying back, being it's $1 trillion a year, it's a very significant flow. That is starting to come to a close. That era is starting to end. So you see there's a sharp decrease. We're now down to something like 0.3 trillion. But it's closing. If you look at the investing flow, which is CapEx plus other things, but let's just for now, let's say it is proportional to the capital expenditures on things like AI data centers and things like that. You know, it was relatively high through 2020, 2022, 2023. It fell off a little bit in 2023, but I think as it was falling off because of like all of the scares and the higher rates from 2022, AI started hitting the scene in late 2022. And so everybody was kind of caught off guard. They're kind of like, well, you know, we're cutting CapEx because you know, it's more expensive to finance things, but AI. And so then it's kind of turned a corner. And so basically from when Yellen started juicing the economy by selling all bills in October 2023 until now, CapEx has just been a straight line, right? Just from like 1 point something billion to 2.2 billion, or sorry, trillion a year, and that's going up. So what you see is that CapEx is rocketing up. It's increased on the order of $1 trillion over the last year and a half or so, and buybacks are going down. It's decreased by about the same amount. Even so, if you look at the free cash flow, well, I say free with an asterisk because what I'm showing is basically operations flow um, minus the investing flow, right? That's the free cash flow. And then they choose to give that excess cash back to their shareholders in terms of buybacks, right? And so then that net is flat. But if you just say, what if they chose not to give it back to the shareholders and just hold on to it? That's what that free cash flow is kind of showing. It's in the toilet. It's almost to zero. So that brings me back to what I'm trying not to put you under the gun on. How much of CapEx for Microsoft and Google are they planning to finance going forward?
I don't remember Microsoft's off the top of my head. I know there were 35 billion for the quarter. They said spending will rise further this year, and they walked back the guidance on moderate CapEx spending, and moving to full speed infrastructure build out. So I don't actually know what that means in terms of numbers, but Google also raised their CapEx spend. Again, not sure how much. but I know it was like 75 to 85 billion earlier this year. Oh, okay, they boosted it to 91 to 93 billion. And their total revenue for the quarter was 102 billion.
93 billion for the year, or for the next quarter?
For the rest of 2025.
So for the quarter. Wow.
Yeah.
Okay. So almost all of their revenues are going to
Pretty much
AI
entirely. Yeah.
which is pretty similar to last quarter. I don't remember what the exact number was, but it was very high.
There's actually a really important line I want you to add to that chart, and that's buybacks. Announced buybacks.
I'm not adding lines to the chart. The chart is set in stone. I'm not remaking
You gotta
it. This is free.
You gotta add buybacks to the chart. The reason being because as CapEx continues to increase, and the need for financing that CapEx rises, those dilutive pressures are going to rise, and buybacks are going to halt or
that's
start
in financing
being clawed
flow.
back.
Yeah,
So I
he's
don't
got
break
that
out
included
how
in
much of
financing flow.
Yeah, I don't break out how much of the financing flow is in buybacks, but you just make the assumption that negative is buying back, positive is selling shares and bonds. So yeah.
So an interesting take
exactly
I have
right
here, which isn't necessarily what I'm 100% on board with, but everyone's like, where does this bubble end? And I've pretty for the last few months, I've pretty staunchly, I would say since like quarter two, I've pretty staunchly felt that if nothing geopolitical kills it, and nothing to do with monetary or fiscal policy kills it, and I think those are all still have their own risks separate from this. I think simply the financing of all of this infrastructure is going to deflate the bubble, because like I just said, as CapEx continues to climb and the costs of all of the base level costs of all of these things continue to drive up due to the massive demand in such a narrow, actually really narrow market, we are going to all those companies are going to have to spend more and more to do less and less, and they're going to start financing that. They're going to finance it through stock selling, right? Dilutive measures against their own stock. They're going to start financing it through corporate debt. And, if you buy a bunch of corporate bonds, first thing you're going to do is go short the company. If that company's already diluting, their stock's also falling on that side as well. And I think the cycle is rapidly just approaching an apex where buybacks are going to have to cease in order to continue this CapEx demand, and the dilutive effect of increasing the available cash to spend is going to drive the PE ratios on these stocks down really, really rapidly.
Girk, just so you know, you scared every single CFO in our audience.
Good. I mean, it's just. I mean, all of this is cyclical, right? If we look out past, our own biases and all of that, these are chip companies. At the core of this, the people selling everyone the shovels are chip companies, right? And chip companies have a cyclical business model. I mean, you get a high amount of demand for chips, and then everyone's got chips, and they're good. And then I could really scare everyone and ask the big question is, do we really need to run all these floating point calculations to facilitate a chatbot, or could it just be simplified?
The thing is that they're going to have the cost to do this. I mean, everyone is still just, racing to the bottom in terms of what they're offering versus what they're charging. So I mean, yeah, it's not just is it worth it to run these calculations? It's literally, is it worth it? Like, are you going to make any money off this? I mean, so far we haven't really seen anything. I mean, I know OpenAI has a lot of revenue, but it hasn't really translated into any profits yet.
I mean, to be fair, OpenAI has had more free marketing than I think any one thing in the history of the world. and they have what 800 million weekly active users. Who the fuck knows at this point? The fact that they're only making like $12 billion a year
Yeah,
seems kind of terrible, right?
it's awful. I mean, if you
Maybe-
charge them all
maybe-
$10 a month, you're
maybe
making
something-
what, $8 billion.
Maybe
I will say they've given me a free 1 month free of ChatGPT Plus, and I've probably already used like $40 worth of asking it things, and most of it is just like, this isn't right, do it again, hoping I get what I want. Yeah, doesn't seem they're giving it away for free now when you set a race to the bottom.
Yeah, I mean, it really is. This is that right there is case in point how little money they're making with how many active users they're touting. I'm like at some point you just go, you know what, this is $10 a month, and if it's really worth it, people will just buy it. You know, like that's the thing, and they could just instantly be making shit tons of money.
Their
But
takes,
instead-
their takes though are like shitty phone game rates. It's like 2%.
Yeah, I know,
maybe
that's
this is
crazy.
the scarier chart.
Well, yeah, I mean, I feel
Ooh.
like this is. I figure what's going to happen is that the luster wears off, and people realize that maybe it doesn't help them at their job, you know, or whatever, or maybe having it write emails has made you sound like a total weirdo.
Is
unless
declining growth in a major market for one of the world's hottest companies bullish?
No, but that being said, they did just, I try not to talk too much about AI because I'm so polarized about it. I know I put people off, but you'll see what I see one day. We're getting closer.
Well, yeah, I know that.
That being
but,
said,
yeah.
OpenAI is moving to whatever semi-public thing that got approved through Delaware. They couldn't say no to all the tax revenue that they were going to receive. So they're going to be getting 20-something extra billion from SoftBank, who's their credit's getting hammered because they're taking out loans to give it to OpenAI.
SoftBank will be fine if Japan raises rates in 24 minutes, right?
Well, sure.
No.
Hopefully we won't still be streaming by then, but knowing us,
They'll be
we
sad.
might. But then you've got like Oracle, Microsoft, Google, all these people NVIDIA throwing around basically over $1 trillion in promised spending over the next few years. It's like $1.5 trillion or something now. So everybody is still promising the moon. And my thing has been for a while now is that what is amazing to me is that nobody's saying, wait a minute, no. Everybody's saying, oh, yes, please, more of this, right? And so when you say, like, when does it blow up, right? There's all these reasons why it should never have gotten this big in the first place. But when does somebody actually say no?
You see, the problem, JFresh, is that everybody's making money on it right now.
Not private equity.
That's where you get the money from that you make. That's how you make the money. But everybody's like that's and private equity's been sold the dream, right? So they're willing to throw money at everything. But in
for a
terms
while,
of
but they
everybody
haven't
else,
been cash flow positive since like 2016.
You know what? That just makes them even more desperate. And so when something
Right.
shows up, like you could sell the dream way easier to those people. But everyone's making so much money on it that promising more and more and more they're literally probably just going to push it all the way to the point where it's at the point where like this is actually ridiculous, and then people are going to start not wanting to give them any more money or even asking for their money
Everybody's
back.
already saying it's ridiculous. It's become a mainstream view now.
No, it's become there always has to be a sense of otherness, and you pick a side with all these stupid ass things. So and then the fact that it is a bubble is becoming obvious because of all these, letters of intent and all this stupid shit. But that doesn't mean there isn't a large cohort of very financially successful people who have fully drank the Kool-Aid and fully believe that this is the future. And not just the chatbots, though. The thing is they're being sold the dream that AGI, ASI are right around the corner. This is the stepping stone that just shows that we are like just a gooch hair away from a superhuman that's going to cure cancer and make us live forever. Like that's what they're being sold, and they're buying it. There's people who are still buying it for sure.
Yeah. So just to kind of bring this back around to earnings and then moving on, I want to tie in one more point. I think you're right. I think it's really hard to know when it's going to end because there's actually a lot of desperation, I think, buried into all of this. I think there were something like 80 announcements between all of the AI groups led by NVIDIA the other day. And the media responded by saying, oh, NVIDIA et al. Are flooding the zone, which was, I mean, when people say the phrase flooding the zone, they talk about like Steve Bannon and Trump 1.0 and
It
their
sounds like
political strategy, right? I mean, so it's
yeah.
it has a very negative connotation
Well,
in,
it reminds me
media
of
circles. And so
it reminds me of the the video of the one media group where everyone's saying something was dangerous to our democracy and they were all basically saying it in unison. It's kind of what it feels like.
yeah, well, that's why I thought it was so interesting that the media used the phrase "flooding the zone" when talking about Jensen Huang, because of the negative connotation of how basically it's regarded as a political strategy that is effective but scurrilous, right? And so you have the media now talking about the number one CEO in the world as effective but scurrilous. I think that's just kind of an interesting turn of phrase that they chose. But anyway, I want to kind of circle back because Kirk mentioned, because we're running out of financing flows and increasing our investing flows. CapEx is going up, buybacks are going down. We're kind of reaching an inflection point there. I want to highlight a couple of other inflection points that earnings have sort of shown this week that maybe we haven't highlighted a lot. And one is UPS, right? UPS revenues were down. Their non-GAAP profits were up, but they were only up because they ignored something like 300 or $400 billion of costs for their restructuring. So if you ignore costs, then their revenues or their earnings are up, but their GAAP earnings are actually down. So revenue down, earnings down. Talking about all these layoffs that are coming, UPS is struggling. Noted JetBlue also down, so they don't really have the benefit of the other big carriers to have a lot of the company revenues, right? So they're more just consumers, and they were struggling. DR Horton also just looks like trash. Their balance sheet looks terrible, and learned this today. I never followed Wayfair that much, but realized that Wayfair is not a profitable company in general. um, but yeah, so I kind of wanted to highlight. It seems like with all of the layoffs and the job losses and just the weak job market, it seems like we're getting close to a turning point there as well, right? I don't know. Am I being overly am I overweighting these few cases, or is this a trend?
ADP was down too. So that was interesting to see. I think they just missed expectations. And I think their AI rollout may not be yielding good results yet. Stuff like that. But yeah,
Yeah,
those
there were
guys who
other
do
yeah,
payrolls.
there were a couple other, like NXP is another big I guess kind of more of like the robotics AI play, because they sell a lot of analog to digital like control chips and things like that. So kind of like a Texas Instrument. Texas Instruments is more sensors. NXP is more like controls, but neither of them are doing super great.
Oh, Chipotle.
Uh,
Chipotle, I'm pretty sure had a sad night.
yeah, but everybody will just say, "Well, Chipotle is gross now," right?
Is that what they're saying? I thought Chipotle was
I don't
the
know.
good thing.
I don't know. I go to Chipotle every once in a while, but anyway, we don't have to talk about what I eat. But um,
How do you clean out your underwear blood?
I just buy new underwear.
I just use Chipotle way.
It's disgusting. All right. Well, nobody under the age of 12 can watch this now. Great. Thanks. All right. We've talked enough about earnings. Let's get into other stuff. Anything to look forward to in terms of data? I know we're still shut down. Is the world going to end when Snap ends on November 1?
Interesting you should say that. Considering how hard companies have lobbied to be supported by Snap, I mean, there goes a large amount of their subsidization. So the world's not going to end, but if the longer people don't pay with Snap, the worse it's going to be for, you know, your Unilevers and, you know, Nestle's of the world are going to be. So, and Hormel,
Nestle
those guys.
also announced layoffs, 16K or so. Yeah.
So yeah, that's something to think about, is that 40 million Americans are on Snap, and that source of funding goes away for them, which means that they're going to be, you know, those customers are going to be much more discerning, much more value conscious when they go shopping the next time.
So it looks like we're supposed to be getting, I have no idea, honestly, which ones of these we're actually getting this week. GDP, annualized quarter over quarter tomorrow. Initial jobless claims tomorrow.
We should get the
Personal
initial
income
claims
on Friday. Personal spending on Friday. PCE price index, which, to be fair, most people, you know, it is easy to impute with pretty good accuracy based on the data we have so far. So right now the consensus is 0.3 month over month and 2.7 year over year, which is about what it's been. Probably pretty accurate. Core PCE also kind of in line with how it's been in the past. So again, inflation high but not crazy high.
Yeah, I think we
Any
will get
thoughts
initial
there?
claims because those are, I think, done by the states.
Yeah, but who
so
knows how they're aggregated at the federal level?
That's true. That's very true. But yeah, but we might still be able to do that ourselves. Ugh.
What?
Yeah, I mean, maybe
Initial
we'll watch
claims.
the Twitterverse and see if there's somebody who digs into all the state data sets and aggregates it themselves. There's got to
Yeah.
be some nerd on X that does it.
Yeah, we're talking the initial claims, yeah. So, because we should still be able to get those somehow, because they're released by the states, I believe. So,
Go get them.
just go get. We want to go to like Washington and be like,
No.
hey,
Go fucking go to each state website and scrape the data every month.
ugh.
Hey, you know what? That's the next phase of GammaStrike after we finally launch.
Yeah. Scrapers galore for all the
We gotta
public
build
data that's
out
out
our
there.
fundamental data that is coming, and we're excited about that, but we gotta plant a flag in what we've been working on now. Speaking of GammaStrike, I think it's time to move on. We're gonna plug our podcast. Please, if you like this, subscribe, like, tell others. Whatever. Ron made me say it.
Fucking Ron, man.
Dude, Ron, you got to
Yeah.
get better at these. At least JFresh
Yeah,
is
at least
funny.
give us like a script for something. What is that? Just plug our podcast?
What the
How are
fuck
we
does
supposed
that
to
mean?
plug it? With a
Don't
Let
you
me
know
just
we're
read what
idiots?
he wrote. Let me just read it like
Why don't we just announce a
teleprompter.
deal where anybody who likes, subscribes, and tells a bunch of people could get like a GammaStrike butt plug, and then we've plugged our podcast.
Literally.
Yeah.
Oh shit.
Actually, if we make GammaStrike podcast or butt plugs, I will. Can I
wear
test
one?
them?
Yeah.
Yeah,
of course.
Well,
test
just
you
in order
mean
to
you
make sure the
mean-
product's good. I can't
Yeah.
sell.
Wait, so like the GammaStrike's on like the bottom side, so like my booty's gonna have a nice cute little GammaStrike logo coming out of it?
Yeah, you'll get them at the same time you get your house.
Is it like the silicone with like the swirled colors together in GammaStrike colors? Oh man, I'm really a fan.
Yeah.
There's a lot we could do here.
We could even
actually.
make like the logo on it spin. So when you twerk, it'll be like a spinner.
Oh my goodness.
Yeah, you could put like an offset weight on it, so it yeah.
No, yeah, like a fidget. What are those high quality bearings on the bottom? Just
Oh yeah.
Listen, a lot of people's moms took Tylenol. Okay.
Hey, you know what? I think we should go with a thrust bearing so we can do
Oh.
radial and axial loads.
Smart.
Nerd.
Yeah, no, it fucking
Uh,
listen to the podcast. You're already here, but tell your friends, I guess, so you can embarrass yourself.
that's what our subreddit's going to become. Is just pictures of people wearing their GammaStrike butt plugs.
So the most popular subreddit on Reddit.
It would quickly become
Yeah.
that, not gonna
Yeah.
lie.
Yeah, we do have a subreddit, by the way, and I'm sure Ron wants me to plug that shit too. Go to Reddit/GammaStrike. I don't know.
Reddit/r/Volstars. VOLSTARS.
All right. Dork, this is your time to shine as the up and coming MC, because I will
Oh,
die
God.
soon and you will have to take over.
Okay.
Why don't you take us away on the audience questions?
Yeah, this is our audience questions portion. Woo. If you want to ask questions, we put links in these releases. So you click the link, put your question in there. If we like it and we have time, we will definitely get to it. We won't definitely like it and we won't definitely have time, but we will definitely do it if both are okay. Okay. So first question. You guys referred to Mag-7 as a store of value. How might those as a group behave in a market crash or steep correction? Will all 7 eventually recover? Well, that's a good question.
No.
I mean, well, no, it's a good question to address.
Oh,
So
okay.
Mag-7 as a store of value, I think that it's not necessarily a store of value.
Well, actually,
I mean, it is
no.
for the market, but
we discussed this last time. It's being treated as one because there's nowhere else to put money with as good a returns or as much potential. But I mean, look at the .com bubble. I don't think this is any different. This seems like a very simple explanation. If
according
all
to
the
JPOW, it's not like the .com bubble.
yeah, well, he's wrong about a lot of things frequently.
I know.
At the end of this, if all of the dreams of AI come true and we make our big digital brain in the sky, and one company is going to make that, and the rest are going to get obliterated. And that's how capitalism works. If everyone's chasing the same goal, you might end up with a market that's spread out over a few individual stocks. Apple will probably be fine as long as telecom companies continue to finance their phones every 5 years, but that cycles keeps extending, so they'll have to bake in some more planned obsolescence. Tesla shouldn't have much exposure to AI. Unfortunately, it does. And then the rest of them are all competing, right? The whole point of the spending is to beat everyone else to the finish line. A finish line that's, a lot of academics argue is not real. But they're still trying, because they've got to spend money on something.
Well, the thing is, if
did
they're
you just call
wrong,
me?
he called you an academic.
God damn it.
But so Girk, I want to push a little bit on this idea though that like they're chasing this unattainable goal. The thing is though, is what if it is attainable, right? And they bet that it was. I know, and they bet that it wasn't. Right, in their minds, that is a life or death situation for some of their business models.
Yeah, no,
like especially Meta. That's why they're betting the farm on this because
I know they have to. I agree.
Yeah,
I agree because if and I'm
it's
sure many of them know
big
this.
If.
Yeah, if it's real, then they have to spend money on it, and so it's a gamble. I'm sure most of them, at least at the higher levels in these corporations, are well aware of how big of a gamble it is, but it's still one they have to take because you can't get left behind. Otherwise another monopoly takes over. And I guess as far as will they recover, what's Sun Microsystems priced at nowadays?
What's Sun Microsystems?
Sun Microsystems
most people under the age of
it was like
35 don't even know, and probably people under the age of 40 don't even know what Sun.
It was an egregiously overpriced .com bubble stock, where the CEO himself had to come out and say, "What is wrong with all of you? we could never obtain these valuations in a million years with our business model. And there was a whole very famous address that he gave to his shareholders.
Yeah,
That
pretty sure he basically said, if I wanted to pay you guys anything, I would basically have to commit massive amounts of fraud.
Yeah.
What were you thinking? Yeah. But I'll say I kind of agree with the discussion here. I think it's hard to. Yes, we lump them all up as they're going up, but their strategies and their models are all very different. And so when the rubber meets the road, it's like Apple is largely, for example, stayed out of the AI frenzy. I think to their credit. I mean, to their credit in the sense that Siri is still a piece of shit that I yell at all the time when I'm in my car, and I'm like, why did I even bother trying?
You know what? Siri's really good at vocal data entry.
I don't ever do that on my phone. I don't know. I mean, other than just like set an alarm.
I call phone numbers where I just have the numbers, and so I just say the number out loud, like super fast, and then it just whoop pops it up and calls it. It's about all I do.
Like audio to text, sure.
Simple things.
Does anybody know what Apple's planned spend for AI is?
I don't think they really talk about it. They don't.
I don't think
they're
care.
Not really.
Well, so I just want to.
They're trying to.
I
think they're intentionally avoiding it.
I kind of want to reel this back though, because this person asks particularly for like in a market crash or a steep correction. And so I think that there's two different scenarios where that could happen. One, the AI bubble pops and someone big becomes really sad with debt. And that type of a crash versus, say, there's some sort of big giant credit mistake that happens in the market and liquidity just goes kerplunk. In that scenario, if the AI narrative is still going strong, they're all seven will recover the same. They'll still be highly correlated. But if it has to do with a company going kerplunk, they'll probably still be correlated on the way down, but on the way up, you will see that people will be laser focused on balance sheets and cash flows. Like that is all they will care about on the recovery side of things. So will they all eventually recover? Some may not if it's actually something super dumb. But
Tesla.
Right. Yeah. Some of them may never recover to those valuations, or they may do it in a time frame that is inordinate. So I mean, there's no way of knowing unless you actually know why there's a big giant correction.
Yeah, I mean, it's obviously it's impossible to say, right? That's not a very satisfying answer, but we can look historically, what happened in the last, if we ignore the quote unquote crash, it's technically a crash in April, whatever, but we look at the crash in 2020 from COVID, who did really well? The Mag-7. But a lot of that was driven by the thesis that technology was going to get us through it, right? So like people could do work online through Zoom, like through their technology, and then you have like all of the all the biotech that went into getting a vaccine. So it was just like tech is going to save us from this catastrophic event. Can we say that that's going to happen again? What if tech is the catastrophic event, right? Tech just imploding on its own hubris. That's a completely different situation. Now, if it is not, I think I kind of agree with Dork. If it's not related to like an AI blow up, sure, people might still hang on to the AI dream and say, well, everybody else is going to shit, but AI is the future, so I'm going to hold on to the future while the present is bad, like in 2020. But so the reason is going to matter, I think, a lot.
Yeah, it'll matter a ton in terms of the recovery aspect of things. In terms of a correction, though, when there's fear and there's not a lot of information, then they'll be highly correlated. But on the tail end of things, as the dust starts settling, you'll see winners and losers for sure. I mean, even if it's a broader market correction, you'll still see, at least from institutional investors, more mind being paid to which companies they put their chips in with, because they're at much lower multiples now, and they're entering at, much more reasonable prices. So they want to make sure they're picking things in a smart way to maximize the return on that.
Yeah.
So I mean, there's gonna be some sense of that, but they will all eventually recover if this has nothing to do with AI, right? If a market crash happened and it was not related to AI, they would all recover eventually.
All right, Dork. You've set yourself up for the perfect transition, and I'm just really fingers crossed. I want you to stick the landing here.
Oh God, now you put so much pressure on me. I mean, so with that in mind, right, I think this is a great segue into our next question, which has to do with maximizing returns on your investments. Could you elaborate on how indexes move with individual stocks, components, and then how do market makers hedge? Like, it seems like the index would be a pure derivative of the components, but it's obviously not a perfect one-to-one on all underlying assets within the index's activity.
Yeah.
Yeah. So
Yeah.
the key transition word there is correlation. You said that a
Oh, right.
lot
God
on
damn
the
it.
way down. Yeah. You were close. You
Yeah.
almost had it.
So indexes
Stupid,
are
stupid.
a construct. They're not a derivative. And so, the divisor for an index is like a
It's a
scaling.
proprietary number. It's called nuh-uh, we can't tell you, even though you could figure it out really quick.
Well, it's like a scaling constant. And so,
Yeah.
because of
Well,
that,
SPX's is called a proprietary denominator.
That's
yeah,
almost market cap, but a little different.
Right.
yeah. And so what you end up with is you have a lot of like, oh, there's so much market infrastructure that goes into this that's really not. I mean, you have things like asynchronous trading where, different exchanges on different latencies. You have halts, you have Luddle, you have opening and closing auctions being timed differently in multiple places. So
You have ETFs, like
the live index price at any given tick is like a mix of live prices and then also like stale component prices. And then you also you have things like rounding and odd lots. And then there's flows from futures and from ETFs that can push the index to lead. So like APs keep ETF price close to
authorized
basket
participants.
via like creation and redemption. Yeah, authorized purchase. Thank you. And so persistent ETF premiums and discounts relative to NAV can churn creation and redemption flows, and that propagates out into the underlying stocks. So futures and ETFs can move first before the baskets on those ETFs mechanically push into the underlying constituents. So
You actually saw that today on the FOMC release. When there was that big gap down in SPX, the gap down first happened in SPY.
Mm-hmm. And
that was
so
interesting.
I guess like the first thing to remember is no, they're not all perfect one-to-ones. And then for single name stocks, MMs are generally offsetting market beta with like index or futures or ETFs. So they can narrow down their exposure to be just idiosyncratic.
Yeah.
And then for indexes, almost all of the hedging is done with futures or ETFs. And a lot of that done via ES or MES, and SPY really specifically for like the S&P 500. So, gamma's hedged by adding or removing ES exposure as the index moves. Vega's usually hedged with like calendars or diagonals or variance swaps or VIX futures. And like correlation and dispersion risk is hedged with index options like Vega convexity, and single name volatility.
Yeah.
So
Well,
by
there's
creating baskets where an MM can neutralize single individual components of neutralize volatility exposure to individual components.
there's also the individual equity side too. I mean, they use those ETFs for things like systemic shorting. So, like, let's say you want to be long these certain companies, right, but not these other ones. What you could do is you go get 50,000 shares of an ETF and turn that magically into shares of the individual companies, and then sell the ones that you don't want and keep the ones you want, and you can sell as many as little to get the right balance. If you need if you need to get down to the individual equity level, it allows you to do that. And that's, I mean, if you think about all these Mag-7, Mag-10 ETFs that have been coming out, I mean, it starts to make sense why they are coming out, because there's a lot of money to be made on the ETF side, providing that liquidity for these market makers. So, yeah.
Yeah, and I want to try to provide a simple answer to this question that doesn't involve a ton of jargon, just so people can start to get a glimpse of understanding of all of these connections. Let's just talk about, some index. Let's just say it's SPY, and the individual components, right? You can move the individual components by buying SPY, right? And by buying SPY, you're basically applying upward pressure to all of the components. Or you could move the index by buying an individual component like NVIDIA, right?
Yeah, well, actually, that's part of like the whole dealer construct, right? You get flows, and then that causes hedging, which causes the feedback. So, if people are buying single upside calls, like single stock up calls to the upside, MMs are going to end up short delta, short gamma. So they're going to buy stock, and that pushes up the underlying component, and then the index rises due to the weight being increased.
Yes, yeah. So there's a lot going on there, but the essential idea that I want to get across is you can move all stocks by buying the ETF, let's say, or you could move the ETF by buying one or a basket of the stocks. And those things correlate not perfectly, right? So, one of the things that seems to occur is that the volatility of a basket of the individual components often does not equal the volatility of the index. And the way to think about that is, let's just imagine an imaginary index that has, let's say, 5 stocks. Let's not make it too complicated. If the index goes up 1% and every single component, all 5 of those stocks in the ETF, also go up 1% at the same time, they're perfectly correlated. Their volatilities are the same. If let's say one of the stocks goes up 5% and the other stocks go down, or I should have probably said 4. Yeah, if one of the stocks goes up 4% and the other 4 go down 1%, the volatility of the individual components taken individually are quite high, but the index didn't move. So its volatility is 0. And so the difference in the volatility of the index versus the volatility of the individual components is related to how correlated those stocks are to each other. And so one of the things that you can do to look at how well linked the volatilities of the index is to its components is correlation indicators. And I know, Girk, you look at a lot of them. It's like core 1 month, core.
Yeah, we also, I mean,
3 month,
yeah, we
etc.
also have some of our own correlation indicators.
Yeah,
but
I know. Yeah, I just try not to make it too complicated because I know that we went real deep into it real quick here.
Yeah, we look at
used a lot of buzzwords.
So CBOE comes out with, they have an index for 1 month correlation and 3 month correlation for I believe that's SPX, right, Girk?
Yep.
So
yeah, those are for
those are
SPX.
something that, yeah, it's something that he is particularly a fan of for watching this what JFresh is describing as dispersion of volatility, right?
That's what I mean. Yeah, you have correlation and dispersion. So both of those are, kind of. I don't know.
They're two sides of the same coin.
Yeah. I mean, they're
so
not, but yeah.
They can be.
So I'll tell you kind of my setup. You can love it or hate it, but I'll throw it out there. What I'll look at on a daily basis is I look at the SPX, and then I look at RSP, which is equal weighted SPX. I look at the market cap of the Mag-7 added together. All this is on TradingView. I just made a little Pine script to do it. And I look at the VIX. Sometimes I'll look at VIX 1 day, but usually I'll look at VIX 30 day. And if you can put those things on the same chart and you can understand what all of those things are telling you, then that will go a long way to helping you answer this question that we're talking about, which is, how all of this stuff correlates together in terms of hedging and things like that. I'll give you one example. Often, very often, the market cap of the Mag-7 will go in one direction and the equal weighted S&P will go the other direction. And then the index itself will be flat. This happens all the time. And it is a bizarre occurrence. To me, it happens way too often. It makes sense. Everybody's kind of invested in the Mag-7 versus, everything else, right? And they're also doing a lot of trading on the ETFs. But yeah, you see it every day almost. One will go straight up, one will go straight down, the other be flat. Happened today. It actually happened today. RSP went straight down, Mag-7 kind of went up, and the index was flat for the early part of the day. And so that kind of gives you a sense of, the relationships between the two and kind of that dispersion or that correlation that's going on there and sort of how those trades are playing out. And so, I look at a day like today where the Mag-7's going straight up and the, equal weighted's going straight down, the index is flat. And I kind of say, okay, short vol on the index is in charge, right? The short vol on the index is holding the index flat. And everybody's going long the, Mag-7 for whatever reason, right? I think right now that some of the components are squeezing short calls. And so as a consequence of those two things, shorting volatility on the index and longing bullish vol on the largest individual components on the index requires that everything else goes way down. So that's just kind of one example of how those things work. And obviously the reason that all those things are linked is because the MMs are hedging those differences in volatility. Anyway, I've rambled enough there. I hope that helps somebody.
Yeah, that was definitely a much simpler way to put it than what we said.
Well, I thought they were asking a little bit less about that and a little bit more about why why the tail wags the dog. And so I was a little bit more focused on the mechanical side of it. And there's
the reason the tail wags the dog is because most of the volume that's traded in any given day is on index option derivatives and futures, and options on the largest individual stocks and everything. Yeah,
I think
like,
even
like
more,
I just said,
yeah.
the RSP must follow from that, right? So based on sold options on the index and long options on the Mag-7, RSP must do the balance of those things.
Yeah, and because 0DT volumes are so high, all those huge gamma flows end up pulling the index into the like futures ETF microstructure, and then all that ends up happening is that dealer feedback loop that we kind of brought up earlier just kind of dominates everything. So it's you get caught in cycles where you just get hours and hours of dealer feedback, and that's really all that's going on. There's no price improvement or anything happening. You just have dynamic flows just pushing the market back and forth.
Yeah.
Just
I will say one thing I'd love to add that I still need to add to my list of things that I track: the RSP, the SPX, the Mag-7 market cap, and of some measure of volatility, whatever you prefer. I would say future flows, particularly like volume. I would love to add that in. I just have been lazy. I just don't think about futures all that much.
Don't sell yourself short. You're not
flows.
lazy. You're busy. You're a busy person.
Yeah.
All right. I mean, those are some great questions. I'd love to hear more. Once again, to remind everybody, please click the link below wherever you're getting this podcast if you would like to ask a question. No matter how smart or how dumb it is, we'll read it and we'll laugh at it. No, I'm just kidding. We might answer it. Be fun. Yeah. So on the GammaStrike side of things, well, we got new RTD making some big headway. So real-time data is going to get a facelift pretty dang soon. Working through the last little minutia that are certain to make us all hate each other by the end, as every feature does. So
we might be within a week or so of pushing it to at least users.
Yeah, there's been some good progress. So me and we got some good progress being made. So
I haven't looked to see what what's happened this week, but if
give it a look. Give it a look. I think you'll completely understand what happened. What I had our resident code slut crank out. Because I think it was exactly in line with what I was talking about.
Okay, so new update. He made everything yellow.
Well, it's all fucked. No, it has to do with the slider. It's all fucked up right now, and he warned you to be all fucked up.
Why is everything yellow? Oh, it's green. What
slider.
is going on?
Do the slider.
Ew.
Yeah, I know it's dumb, but yeah. Anyways, we can argue about it later, but it's I think it's in a good spot to get kind of wrapped up.
If you're happy, I'm happy. I was happy with it before, but if you're happy, then that means it's even better. So
I mean, all that matters is that Girk's happy. He's our resident guy who trades stocks. Speaking of trading stocks and making bets, stupid bets. Who's gonna win? Who's gonna lose? Fuck you, Jay Fresh. My segues will be terrible forever.
That actually was fantastic. I'm a fan.
Who won? I think any of us win?
Nobody won. Ron super lost. We can all agree Ron lost.
Yeah, Ron's terrible at this.
Yeah, I can't believe you did so badly with that.
He's also, you know what else he's terrible
that
at?
You were forced into
producing podcasts.
Yeah.
Wow.
Why is there no gap in the sound?
Jesus, we love you, Ron, but fuck you.
Yeah, eat shit. Okay, well, since none of us won, none of us, I don't know, get to name the better. We don't even have a reward.
But does anybody know this time, though? Japan cut yet? Or hiked, rather?
Oh, of course we went over, right? So we should know. Should we just make that bet right now before it happens?
Before we look?
No, we have to. I mean, if it already happened, we
Yeah,
can't.
we can't.
There's no way to prove that we didn't look.
I mean,
That's
I
true.
just looked, so I ruined the bet.
Oh, you fucker.
Well, what's the answer?
They did not.
Of course not.
Cucks.
Yep, they cucked themselves again.
They hate
Okay.
Their own
their
citizens.
own people.
Yep.
Yeah.
Yep. Well, that's
With
that.
with the passion of 1,000 rising suns.
My stupid bet for today worked out where Meta went straight down after hours. That was cool.
Yeah, let's not. I've been trying to avoid talking about our positions because I feel like that's a slippery slope. But yeah,
well, I can
Dork,
talk about it in
I hope
past
it
tense.
holds.
Okay, I can
hope
talk
it
about it
holds.
now that
well,
I've
it's not
already
past tense.
You haven't
well,
closed
I'm in
it.
it. No,
Yeah.
I'm in it, but I'm in it, and the fucking earnings happened, and I'm gonna close it tomorrow. So like, who gives a shit, right?
What'd you
It's pretty
make?
much done.
$3.
What did I pay?
What'd you
Or what am
make?
I? Oh, yeah, probably
Who
something
knows?
like a couple $100 if it opens exactly where it's at.
Did you account
Not a
for
lot.
Vol Crush?
Well, this is like 6 months out or something, so it shouldn't be
Okay.
much. Yeah, I'm hoping that some question marks were raised, and so vol actually goes up on the far end, but we will see. I don't really. Yeah, I feel like okay. How about this? Only closed trades. How about that? Is that a decent rule? So we can brag about the things we
I
win
feel
and
like
not talk about the ones we lose.
because there's so many people out there that just like make shit up.
You're right.
Unless
Okay.
you're willing to actually completely dox yourself and like put all of your financial documents out there, it's a slippery slope that I think is not helpful.
Yeah, I mean, I can show my P&L, but then everyone's going to think I'm an idiot because they'll know what positions I have in my tiny ass account.
I mean, yeah.
But no, that was a decent one. But anyways, we got to come up with another stupid bet though. What are we thinking?
I know, and it's got to happen this week, which is going to be the hard one.
Maybe the bet is, will anybody actually aggregate initial claims and make an X post about it?
Well, we could do an earnings bet because we have Apple and Amazon tomorrow. We could do Amazon because they've got a bunch, with all the layoff announcements.
Yeah.
Earnings bets are.
I mean, we could.
Oh,
is that too?
I don't know. I guess we could.
Roblox has earnings tomorrow morning.
What about Lily? Lily sounds more exciting than Apple or Amazon.
I mean, I don't understand how they could not be doing well.
Right?
I'm a big fan. As a big man, I'm a big fan.
Fucking chill.
Yeah. Well, there's like 25 people that used to respect me. Are like, oh wait, he's a fat ass. I can't listen to him anymore.
Yeah,
an
that's the way it works.
What about Coinbase?
What about it?
They have earnings coming up.
I mean, fraud. Like, this is the golden age of fraud. I don't know that I want to bet against Coinbase right now.
Well,
you don't have to bet against them.
Yeah, I was gonna say.
Then I think their earnings will be great.
Why don't we roll them all together? Why don't we do Lily, Amazon, Apple, and Coinbase? Make it a real challenge. See who can get the most right.
This sounds stupid as
shit.
I love it.
Okay.
I'm gonna say Amazon revenues down.
Oh, we're doing revenue and earnings.
Yeah,
we're gonna have to pick 8 things.
Or no, why don't we just go? No,
we're gonna compute the best of 8.
Yeah.
Ron,
no, I can't.
You're gonna have to write all this shit down.
No, I don't want to do a homework assignment for the fucking stupid. This is a stupid bet. I'm supposed to be stupid. How about just EPS up or down? How about that?
Suck.
Let's do no, revenue's too easy. Let's do EPS.
All right.
EPS,
gap,
miss.
gap,
I like
EPS,
that.
gap, EPS.
Oh, those are just made up.
No, gap,
non-gap.
non-gap.
Oh,
gap.
Sorry.
You heard the non before the gap.
Yeah, I just automatically hear non-gap anytime anyone says gap.
Because that's just not called gap. It's just called the earnings.
EBITDA.
Well, why don't we just do margins?
Let's take
make it a real
EBITDA
challenge
and adjust it.
Let's go for I like
bets
even
on
though
EBIT
Ron's
margin.
a douchebag, he did suggest meet, beat, miss. I like that because there's 3 of us.
All right, Amazon miss, Apple expectations, Coinbase beat, Lily beat.
Apple beat, you said, or miss?
Beat. No,
Beat.
at.
Okay,
Neutral.
Apple meat. Okay, Lily. You said miss?
Beat.
Beat.
Coinbase beat.
Coin beat. Damn, you're a fucking bull. All right.
I'm going to say
Really? I
Lily beat.
feel like Apple meat is not. It's not that bullish.
Maybe not.
I'm going to say Lily beat. Amazon beat. Apple beat. Coinbase miss.
Oh shit! This is a stupid bet.
You're drunk. That's what's happening right now.
That's correct.
All right.
Last quarter, Bitcoin was just at all-time highs and frothy as fuck. And you're like, I'm going to bet against that exchange.
Super ultra beat because
you don't get to add an extra one.
I have children, and Roblox is a cultural phenomenon that I will never understand, but I will never bet against Roblox.
Wait, Dirk, what are yours?
Okay, I'm gonna go with
Ron. No one cares what you think.
Well, Ron has to make a stupid bet too. Yeah, fuck you too,
At
Ron.
At the end,
douchebag,
where he belongs,
just shoehorning himself right in here. Okay, I'm gonna say Amazon beat, Apple miss, Lily miss, Coinbase
against fat people.
Coinbase miss.
You're bearish AF. You're just trying to get your meta put.
Yeah, he's just trying to get his meta puts in
selling my put.
Yeah, because after Vol Crush, George's gonna be up $3 on his $400 bet.
Hey,
he's gonna overhold it for 6 months.
Dude, no, I guarantee this thing's gonna be closed by the time this podcast gets released.
No, Ron,
I guarantee you, Meta's probably just gonna open flat.
Dude, if Meta opens flat, I'll actually not be too mad because these are for June. So,
like I said, you're gonna make no profit and overhold it.
It's actually kind of crazy. I actually have had this in my.
You're already defending the theta. That's how I know.
Well, no, I'm defending the theta for the vol crush situation that you're describing here. It's not going to be as pronounced as if there's like a fucking weekly.
I know.
So I had this in my clipboard for like a day now because I was so flabbergasted by it last night. This was the Ivy Smile at close for Meta yesterday, and it's got a thick booty. Basically, everybody was betting that it wouldn't move at all.
Oh my god! Look at that! Look at that smile, dude. That is
it went to like it looks like the bottom of that, like the low point on the downside was like 670. What's it at now?
It's at 700, 705.
Yeah. So they're those positions are a little scary. So MM wins again.
Yep. But I'm hoping that, especially since their earnings was kind of weird, that I can get out with a nice tidy little bit of money. I saw the delta and I was like, I'll probably lose 20% on this overnight. And then I was like, oh shit, I think I made like $150.
All right, well, Ron is too lazy to write us a closeout script, so I guess we're just going to have to wing it. Thanks, everybody, for joining us for this extra
Thank you for listening to Volstars, a GammaStrike production. Please be sure to subscribe and check out our website at app.gammastrike.com.
Wow.
Here's the thing. Fuck that shit.
I love it.
First of all, has anybody had a hard time this week? Depressed, psychological issues, anything, any mental health issues that you want to vent on Ron? Feel free to do so now. We're going to end these podcasts with just abusing Ron as much as possible until he leaves.
The hubris
just full on,
overlaying.
just just makes something, throws it up there, and we're just supposed to go along with it? Like,
Ron, you're
what?
fucking dead to me now. I don't even know what that was.
Yeah, no,
That
I'm not
was
going to make a brisket for you
auditory
anymore.
rape is what that was. All right, so
I feel violated by like a
This
public
is
service announcement.
yeah, so this is the VolStars podcast, a GammaStrike production. Check out GammaStrike. Check out.
He already
us,
said all
I
this stuff.
guess. I'm saying it again in
Like
a
and
human
subscribe
voice.
and shit.
It's ridiculous.
Yeah, like and subscribe. Send us questions, and I don't know.
Yeah, that's about it.